New reporting reveals the economy grew by 5.7% last year. It's the fastest rate in decades, according to the Commerce Department. However, analysts are expecting a slowdown this year as the government scales back stimulus spending and the Federal Reserve signals a rate hike. And it looks like Apple's new iPhone was a major hit. The company reported record quarterly revenue and earnings, surpassing Wall Street forecasts. According to Apple CEO Tim Cook, the tech company's revenue was up 11% from the year prior. Sales skyrocketed in all regions and across most of its products. But today's top story: meme stocks. Remember, we all learned what that meant, that new word? Although shares of companies like GameStop and AMC have cooled down since soaring earlier last year, they haven't nosedived as many analysts predicted. According to some investors, they say maybe it's time to factor in social media's financial power. So Ihor Dusanowski is here to discuss. He's the managing director of predictive analytics at S3 Partners. Thanks for joining us. Yeah, I was all bummed out that I never got on that meme stock trend. And quite frankly, I didn't quite understand it or trust it. So can we talk a little bit more? We want to remind people about meme stocks, more about the shelf life and the overall health of meme stocks. What's your take?
Sure. Meme stocks were really a movement where the retail side of the market was extraordinarily active in certain names. AMC, GameStop were probably the two biggest ones. The OG of meme stocks is Tesla, where the retail guys and the institutional guys were kind of butting heads, and it's still a problem today. It's still an issue today where institutions are looking at what the retail side of the market is doing.
So I checked GameStop early this morning, and I was actually quite surprised that it hadn't tumbled down to where it originally started. It's tumbled, but not all the way back to the basement. So how are these social media-driven manias impacting the way larger institutional investors are thinking about 401ks or pension funds?
Well, for one thing, you're making and losing a lot of money in a very short amount of time. For instance, short sellers were down $6 billion in GameStop last year. This year, they're up around $400,000. In AMC, short sellers were down over $2 billion last year. They made back around $1 billion of that stock. What people are looking for, what institutions are looking for, are indications of what is going on in the market. It's now a big piece of their trading puzzle, and their portfolio build is trying to figure out, not just a valuation of a company, but really what is the market looking at and what is the market doing. It's no good to think that a company is worth $20 when the street is pushing up to 300.
Yeah, exactly. Ihor, it's a fascinating topic, and I'm going to be watching. Ihor Dusanowski, thank you very much.
Thank you very much for having me.